At its core, we believe the greatest returns on offer come from investing in companies which are out of favor, and they're out of favor because they're either disliked or have made a few missteps, or more likely due to a deep and protracted cyclical downturn that the investment community has lost patience with.
For us, it means buying a stock at a discount to our assessment of intrinsic value.
Companies don't operate in a vacuum, and political and economic factors need to be taken into consideration. It's often when the market's concerned about these sorts of issues that it throws up opportunities.
We do our own research. All our analysts are independent thinkers. We try and get them to look at stocks independently, and our biggest focus is making sure that we avoid groupthink.
So we study a company's fundamentals by really trying to understand how the business makes money, what the underlying economics of the business are, how the cash flows into and out of the business, and we overlay that with deep research into the company's financials.
For a stock idea in which an analyst has a high level of conviction, a detailed report will be written up. The report will be presented to a policy group meeting at which all of the analysts will debate the investment hypothesis and vote on whether or not we take a position in the company. ESG risk analysis is integrated at every stage of our investment decision, just like all other risks to companies' future cash flows. We also undertake detailed thematic research in respect of ESG issues that may be relevant across our entire portfolio. Where we consider it appropriate to do so, we may also engage in policy debate by making submissions to relevant government consultations.
When a share reaches our estimate of fair value, we start to sell the share. And then the speed at which we would sell the share depends on a few factors such as the discount or premium to fair value, our position size, the amount of third-party buying appetite, and also tax considerations.
All our portfolio is filled with stocks that are uncomfortable at the best of times, and we try and sell them once they get a little more comfortable.
On the other side of every buy and sell decision that we make is someone who's taking the exact opposite position, and those people are likely to be smarter than us. So understanding what they're thinking is incredibly important in making sure that we protect ourselves from the downside. When it comes to allocating capital, patience is a handy virtue. It pays to be slow. And therefore it's better to be the tortoise than it is to be the hare, although it's fair to say that there are occasions where being a hare is a good thing, and so there's not one size fits all. And the third thing I've learned in investing is that humility goes a very long way.